All right, let's go. All right, let's take it. Look at today's entire session since midnight. This is the live trading right now, where we're looking for our next setup. So let's take a look at the entire session. I want to go over the exact parameters on the S&P, the exact chart you should be looking at, and how to set it up. So how do we find liquidity grabs with one specific chart? This is the S&P since midnight. You can see it's ticking live over here, just under 6,000 right now. What we have is we have our trend filter first. This is the first thing that you're going to look at when looking at finding a trade setup, as far as when you're looking to when to buy or sell liquidity grabs. You'll see this dark green parallel lines, which are my zone trend. These are zone trend filter that's been back tested over 30 years as being the best zone trend, meaning the best trend to find where the S&P can have possible reversals with overall trend direction. In other words, it keeps you on the right side of the market. This allows you not to counter trend trade the market and allows you not to get run over by the professional algorithms that are buying these pullbacks or I call stop hunts, which are liquidity grabs. And that's essentially what these pullbacks are. These pullbacks are where these professional algos, these banks, hedge funds, prop firms, they'll pull the market back into a specific zone or a liquidity grab zone to have these, if it's in an uptrend, to look where these buy order blocks are being placed for continuations of the overall trend direction. So essentially what the market does, it pulls the market back, catches the WPTs or wrongly positioned traders that are against the overall trend and continues them to the other direction. How do we spot the levels when we're going to get in? Where can we place our stop placement? Where can we place our targets? And what are we anticipating on every potential liquidity grab move? Let's first go over the parameters on my favorite chart. My favorite Renko chart is a 1-1-35. Now you can go lower than a 1-1-35 Uni Renko chart. You can do a 1-1-30, a 1-1-25, a 1-1-20, a 1-1-13, etc. The last number, or the tick reversal number, is going to be based on how high your stop is going to be. So if you have a smaller account, you'd want to do the micros. If you have a larger account, you can do less contracts and do the big contract. It's totally up to you guys. If you do if you do Apex trading, a lot of you guys do leverage trading with Apex or Top Step or what have you. You can just do the big contract because they allow you to do up to 10 contracts. So you're available to do per account size up to that 10 contract limit on an Apex or a Top Step account. So what's the best Renko size to use with the system? This is my best Renko size I like to use with the system on finding deep liquidity grabs inside these zones, the 1-1-35. Some of you like to use, members that are inside and outside this room, trade all kinds of markets with this. This works on futures. It works on Forex. It works on cryptocurrencies. It works on whatever markets are tradable. It will work on those markets. It works on commodities. So the zones don't change. These zones are static, meaning they don't repaint. A lot of indicators repaint after they fail. These will show you all the losses, all the gains, all the winners and losers. So it's very transparent. So what's the difference between trading a 1-1-35 and a 1-1-25 or a 1-1-30, etc.? Your stop is going to be based upon your tick reversal because that is going to be your V bottom or your pull-in bar. It's going to be 35 ticks reversing when you get inside of one of these liquidity grab zones. So do you have to have it at 35 ticks? No, you do not. Some traders have it within the rule of thumb was within five less or 10 less. So, you're looking at 30 to 25 should be your initial point of reference if you're using such a large Renko. Now, if you go down to, let's say you want to have a lower stop and you want to use a a 15 tick stop. You can use a 1-1-20. But what's the difference between a 1-1-20 and 1-1-35 on this? The difference is this. Let's take it to the last buy setup we had here. The last buy setup was at 6:30 this morning, which is a great setup. We had a buy setup come with a pull in of a 1-1-35 right here at this level. That is an entry. This is our entry candle. You can see the nice reversal, gives you a nice reversal, comes down to my zone. So here's my zone. My zones projects are very leading. My zone projected this buy signal right there. You have to close at or inside of my projected buy zone. It's got to be at or inside. It can't be above it. Like right now, this last buy that happened at 7:35 this morning is not a valid trade because it never got inside of my zone. So this is not valid. We don't want to take shallow retracements like that because it could get stopped out, high probability stop out. We need to get at the zone or inside of it. So when it got at the zone, which closed inside of it, as long as I don't break the lower end of the zone, because the lower end of the zone is what's called market structure. So as long as market structure doesn't break on liquidity grab trading, that's a term we use for liquidity grab trading, market structure. As long as that low doesn't break, then if I get a reversal candle of the 1-1-35 and it closes here, I have an entry right at that level. So my entry was at 59.83, plus or minus a tick or so. So you can enter off of your chart trader, have an automated trailing system on the number of ticks you have, and it will trail the system, do your break even or whatever, and try to get this move. The second way to enter, and if you want to use chart trader and use chart trader, you can use our automated algorithm. Our automated algorithm will only take zone, our V bottoms or V tops with trend. So if you get inside of the zone, you can double click the algorithm. It takes a half of a nanosecond to turn on. It'll turn green. It will enter you on the first liquidity grab that comes up. The first liquidity grab is the first distortion of price. So the automated algorithm is going to enter you at the first distortion of price at that level. So that's your entry. So instead of entering here at 59.83 with chart trader and ninja, your automated algorithm would enter here at 59.84.5. So it gives up a little, but it's looking for the first pullback, distortion of price, and it closes and it'll enter there. It'll automatically have your stop in. It'll have your target prices in on the dollar amount value and the dollar amount stop loss that you want to obtain on the trade. All right, so you can do it automatically with our algorithm, or you can do it with a chart trader. So that being said, so you just, for all trade setups, you want to make sure that you close inside of my zone and get a V bottom or V top before it breaks market structure. So we do not want to break market structure. I set you guys up on a trade Wednesday over a 10-point trade. When we broke market structure, I said if we break market structure, we were outside a high value and low value area. I'd love to use my 35 zone. I said if my 35 zone fails by one close, this market could tank almost 10 points. Within 5 minutes, it tanked over 10 points. So, these are very leading indicators, and it tells you where market structure is. Market structure is there. We got to get inside of it, and then we close. There's our entry, and there we go. What do we anticipate on the trade then? We anticipate the trade to go between 10 to 12 points on average on a 1-1-35 chart. So if you're a member, then you go back and look at the charts of the past 90 days, 120 days, etc. You look at the average trade on the 1-1-35, it's going to be around 10 to 12 points from the V bottom, V top. If I look at this, 59.83, okay, and the high up here is now 6,001. That's 17, 18 point potential off of this buy signal since 6:30 this morning, and we're at 8:35 this morning. All right, but typically on the first push, you get around a 10 to 12 point push on average. 59.83, the high is 59.97. So you had over a 13-point push, almost 14-point push just on the initial push out of the zone. All right, so this is what we're trying to do. We're trying to get that push. You can have, like I said, your chart trader automatically trail, Or you can do the automated algorithm. If you do the automated algorithm, it'll get you in automatically here. You'll have a dollar amount loss, a dollar amount target. If you're doing a dollar amount target and you want to automatically show your position, I have a stop line that comes up, just like Chart Trader on the automated algorithm. It will get you in automatically. You can have your target way out, and you can adjust by point and clicking as a trailing stop loss. So you'll see a blue line come up, a red line for your stop, a blue line for your target that you have already pre-programmed inside of my strategy, and you can trail it. It does have a built-in trail, okay? So knowing this information, how can we, if I go back and now look at the overall session, what's a good starting point for new traders? The good starting point for new traders is put a 1-135 chart up and put my 25 zone liquidity grab trades on the chart. All right. Now, if I go to lower than 1-135 to 1-130, 1-125, or etc., what's going to happen? The zones are static, so these zones are not going to change. But what happens is that you are going to get more V bottoms inside of a lower Renko size. So if I go to a 1-1, let's say 20, it may V bottom, go up a little bit, break that low, V bottom again, go up, and then take off. In other words, you may get more W bottoms and M tops because it's a lower Renko size. And so the zones won't change. You'll just get more V bottoms and V tops. As long as your stop integrity is the same, then you can actually do lower Renko sizes also. I just like to show the 1-135 because I like just one candle coming outside of my zone to know it's ready to go. Okay. So that's totally up to traders what zone they want to, what Renko size they want to trade. But 1-135 is my favorite chart because I don't get a lot of V bottoms and V tops when it's inside of the zone. So now let's just take a look of how these algorithms like to pull this market back and capture the rolling position traders. So if I go back to midnight and I look at midnight, I am green right here. I've been green all the way up. So how can I be green all the way up? My favorite zone, so I get my head in the right side of the market, is right here. My favorite zone is a 1-1-100 Uni Renko zone. Now, we've actually back tested 30 years with the 1-165, which is going to catch more trades. You'll get more trades with the 1-165. You get less trades with the 1-100. What the 1-100 does, it just smooths out the trend. Where the 1-165, you'll get cutoffs in the trend once in a while as it moves up, which it will catch a couple additional trades if you want to do that. If you're not worried about leaving a few trades behind, just put the 1-100 up to get the nice smooth trend. And then what you do is you put the with the 1-135 chart to get the nice smooth V bottom V tops. That's my favorite chart. My favorite chart is a 1-135 with a 1-100 smooth trend with a 25 zone retracement. So let's go since midnight. Let's take it all the trades and look how these algorithms drive price to catch the wrongly positioned traders, to drive price down into these zones, and then react how these zones get reacted out of. So at midnight we start right here. This is live trading right now. We're waiting for the next setup. How do I find the next zone? Here's how you draw them in and find them. You'll see these little dots down here. These little green dots. They're parallel to each other, and then you see these little red dots. The red dots we ignore. We absolutely ignore the red dots when we're looking to make an entry if my zone trend is green. So if my 1-1-100 zone trend right here is green, we're looking to buy only. We're looking to buy liquidity grabs, period. That's it. Only looking to buy liquidity grabs. That's it. So once we understand that, we can look for a pullback. So at midnight, you can see the market was pulling back. How do we draw these in? You can see, just visually see when price gets inside of my zone here. So what I do is I like to take the rectangle, go to the top of the zone, bottom of the zone, project it forward. Right there's my zone. Once I get inside that zone, inside that zone, I now have a launching point for my 1135 to give me a reversal candle, which it did. The entry right there was 59.55.50 at 12:45 a.m. this morning. So this works. I'm going to show you this works around the clock. I'm going to show you all the trades it did last night at 6 p.m. Eastern Standard Time to 10 o'clock Eastern Standard Time. This works 24 hours a day. These zones work 24 hours a day, meaning 23 hours because it's closed from 5 p.m. Eastern to 6 p.m. This works 23 out of 24 hours a day. And I'll show you in a second. So you European traders, are trading the London Open. It works really good at the London Open. I love this at the London Open. So if 59.55 was your entry, the high was 59.70. Like I said, it likes to move 10 to 12 points on the initial push. So right there it is. There is your 59.55 or 56, let's say, to 70, 14 S&P points on that liquidity grab push up. Then the market retraces again. It's catching all these rolling position traders. Comes right into my zone. There's my zone. How do you draw it in? There's the top of the zone. There's bottom of the zone. You can visually see it. There it is. We get our second liquidity grab this morning for this session. Now what we're going to do is we're going to look for a pull-in bar, which is the 35 tick reversal. So there it is. It closes 64.5. Got as high as almost 74. So almost 10 points again. Like I said, you're looking for 10 to 12 point move on these liquidity grabs. Go back, traders, and look on yourself when you come out of this zone. Then we rally, come back inside the next zone. The next zone called a W bottom. There's my next zone. Right there it was, 70.25, high as 85, almost 16 S&P points on that push potential. All right, then we come up again, come down into the zone again, and we're in the zone integrity. We do another W bottom. Stops right inside my zone. And now what we got inside my zone, 78.75. And it's still rallying here. 78.75 to 97. It's another big push. Then we come up again. And this is our last entry. It just happened this morning. It's at 6:30 this morning. We got right inside my zone. Never broke market structure. Gave him a reversal. That was the fill should have been 83. And right now got as high as almost 02, 01.75. So you can see, as long as you don't break market structure, the low of that zone, market structure, the smart money just has been buying liquidity grab all morning. The zones have been 1, 2, 3, 4, 5 for 5 since midnight on buying the zones. Okay? Where your stop placement's going to be is based upon your reversal tick candle. So if it's too big a reversal for you on a 35 tick, do the micros. It's 1/10 of the big contract. If you have a larger account, you can do depending on your risk tolerance, you can do the big contract. Or if you do apex trading or top step trading, you can just do the big contract or the micros because, they have sizable accounts there for a very small fee per month. Okay. They have certain guidelines. If you use top step or apex, you have to have you can't be, they have a 5-to-1 or 1-to-5. In other words, there's certain parameters you have to meet when you're placing on your chart trader. Make sure you meet those guidelines when you're getting inside of these zones. Okay. So that's what we try to do. We try to look at where the rolling position traders are being caught, the counter trend traders. When the counter trend traders are selling the market, we're buying. So basically, when the public is using all these indicators, if you got NinjaTrader, If you trade off a TradeStation, Thinkorswim, all these different platforms, Strategy Runner, all these indicators, you come in here, you hit indicator, and you get all these indicators for free. All these indicators for free. If you go back and look at all these indicators and put them all in the chart, put them all in that chart, and try to find when any of them's buying at these lows, they're not buying them. Why? They're all pretty much saying, sell the market at these lows. Short the market, short the market, short the market, all of them. That's how the professional traders trap the public. What the professional money likes to do, they like to pull back, grab liquidity, and drive it higher. Pull it back, grab liquidity, drive it higher. Pull back, grab liquidity, get the stop hunts in, stop hunting the amateur traders, the amateur algos, and they drive it higher. Okay, now let's look at evening trading to show you how accurate this can be. Let's just go back at 6 p.m. at night when the market opened last night, when I was watching the market. And let's look at 6 p.m. last night. Now, here was yesterday. Here's my 9:40 time of day trade. 9:40 time of day trade was a 25 buy zone. I gave you guys heads up on the microphone before this came up. I said, we're looking for a buy on the pullback to the 25 zone. This was after PPI news. I said, the trend is up. Look for a buy set up. We got it. Nailed it. 60, 17, 50. It got as high as 50. 33 S&P point potential. Before this 100 sim zone break retest came up, I said, hey, if we break retest this zone, look for another entry. We got it. 26 and a quarter, got as high as 50 and a quarter. Came down to the next zone. Look how it came right down to market structure. Stopped at market structure almost to the exact tick. That's how accurate these zones are, these 25 buy zones. And that was the integrity all the way into the close. But I want to show you how this can work around the clock, right? It's around the clock. And then I want to show you where to place your stops, because on stop placement one more time. Make sure you guys understand that. So the market opened up last night at 6 p.m., 1800. You get a big downdraft in the market. We started right here, and it's saying we're going southbound on the Greyhound. We are red, 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 red. So what are we doing? We're looking to sell retracements to catch the rolling position traders. So the counters jump in and say, hey, the market can't go any lower. They reverse it, green, green, green. We know our zone right here. Here's our parallel zone. It comes right inside of it, at or inside of it. There's your first reversal at 6 o'clock, 6:01, almost 6:01. The first push is 03 down to 91. Then it comes up to the zone again, and we get a big giant push. There's a sell zone at 6:04, right after the market opens back up. And this comes in at 59.93. Got as low as 59.67. Look at that push, right? Then we get a trend change. We get a trend change. Turns green. We get a pull back inside the zone, W bottom. Gets as high as 60.50. Goes right back to selling. Turns red. We get a sell zone at this level. We get another sell zone, N top, sorry. Another sell zone at 7:02 last night. Another sell zone. So you can see this even works when the volume is lower in the market. So this can work around the clock, right? So if I look at that, if I look at yesterday's trading and today's trading, let's look at all the buy and sells. Let's look at all the trades in a row. So if I look at all the trades in a row, if I look at all the trades in the row, and we come all the way through, we had 3 major buys yesterday. 1, 2, 3. And then in the evening, we start selling. 1, 2, had a little buy there. 3, 4, 5, 6. And then we came in today's buying, and look, they're stair-stepping it up today. Look at the methodology, what we're trying to do. We're buying pullbacks with trend direction to catch the rolling position traders. Look how neat this is just with the 25 trend zone. This is the 1135. 1-135 with a 1-100 uni trend zone with a 25 sim algo zone to catch the wrongly positioned traders. So if I blow it up, that's an action we're looking at this morning. Okay. And we'll repeat that on a daily basis. Now, if you're new to trading, what I would do is I would come in and only trade the 25 zone off the 1-135 with the 1-1-100. This is enough trades to get your mind right on all these different markets. And this is universal on all these other different markets. The Dow, you look at the Russell 2000 and so on. This is universal. It likes to reverse inside these zones. I have 3 other zones I look at. I use a 35 zone only if I'm outside of market profile. I have videos on that for continuations. That's how we had that 10-point drop I called out before she fell Wednesday. That was off the 35 zone, but I only look at the 35 zone if I'm outside of market profile, HV and LVA, meaning on market profile when we're over here. Get this out of the way. If I'm outside of profile, above HVA, LVA, I'll look for a 35 continuation for us to do a break retest, which I'll go over after this video. But that's what we want to do, guys. We want to look for pullbacks with trend and so on. Now, let me show you. Let's see. I got to stop out this week somewhere. A violation of the zone. I think it was, where was it? It's during 11:15. Let me see. That's sell. There's a buy. Where were you? I'm trying to show you the stop. Happened earlier in the week. I can't find it right now, but in other words, so here's a buy zone to keep it simple. Let's go over stop placement. So here is the buy zone, right? That's a buy. So you see where the sell zone's at up here. We don't want to concentrate on the sell zone. We don't concentrate on the buy zone because it's green, right? There's a sell zone. There's your buy zone. So if you use a 1-135, this zone's not going to change. It's static. So let's go back to today's trading. Get live action here. Waiting for a trade setup. So right now we're coming into the zone right now. We're looking for a buy setup. Let's look at live action. It's touching at or inside of our zone. So right now, this is our next buy. So we extend this out. You can visually see it without extending this out, but I like to extend this out to see it. See, it's at the zone. See, this one did not make the zone. It had to come inside here. It's at the zone. See, it's at the zone, so it's okay. It's got to close inside the zone or at the zone. So what you're going to do on this active possible trade right now, we've had 1, 2, 3, 4, 5 opportunities inside the zone. It's 5 for 5 today inside the zone. As long as your stop placement, because after you enter, if you enter off this V top or the first liquidity grab, it's going to get pullbacks. Your integrity, your stop integrity is market structure. So your stop integrity is going to be market structure. So the trade is still valid until market structure is broken, the low of this zone. So you have to adjust your stop accordingly to let it breathe, because what happens if you W bottom like this? You get a lower low, right? That doesn't mean the zone failed. That means your stop placement is not correct. So remember, market structure where your stop placement has to be, no matter what Renko size you use. All right, so that's number one. Number two, where's the entry? The entry is going to be waiting for this V bottom. See, if you look here, it's closed there. There's my entry. So we're waiting for a close of this candle. The entry is not trying to guess when it's going to close. We're not guessing and saying, okay, let's get it now because it's going to close, because it may just keep going red, 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 break market structure, low here, and then the market starts falling apart. So I know as a trader right now, I know as a trader that if I ever break market structure, guess what? It's the first time it's broken market structure in the last 9 hours of trading. It has not broken market structure, has it? On all these zones. These zones that held all the way up. 1, 2, 3, 4, 5, going on my 6th zone to hold. So if I ever close below market structure here at 81, you're going to have a market that's going to start weakening up, and we could possibly look for a potential trend change, right? Or if not a trend change, at least a pullback. All right, but I'm not looking for a buy setup until we get this to close. It's got to close. For it to close, if I'm using a 1-135 reversal, that means my tick reversal has to go up 35 ticks. It's got to go up 35 ticks. And it's not went 35 ticks yet, so it's not a buy. So it's got to go up to here. So you can anticipate where the buy is going to happen. The buy is going to happen right here. It's going to happen at 98.25. Okay. So a couple ways you can do it. You can enter right at the V bottom or V top. Some traders will use hotkeys because they know it likes to reverse right after a V bottom, V top. They use hotkeys and say, hey, I showed you how to do that in the room. You can buy the dip. As soon as it V bottoms like this, I want to buy a dip of 8 ticks backfill, 7 ticks backfill to fill me in this level. To create a smaller stop, then you can have a smaller stop. In other words, here's your entry. If you get a backfill, you'd be getting filled right around here on the liquidity grab. So you can do that also. You run the risk of missing trades like this if you do that. But that I do have traders inside and outside the room that use hotkeys to do pullbacks after getting a V bottom, V top to get smaller stops. So that's what we're waiting on right now. We're waiting for that to come through to V bottom. All right, let me leave that up real quick. Looking for that current trade setup right now as we speak. So when we're looking at other Renko, larger zones, larger liquidity grabs. So this is our main chart, and you can just trade off this chart if you want to by itself and not trade any other zone. Just trade the 25 zone. That's it. You have plenty of opportunities since midnight to get a hold of that. And like I said, if you trade the London Open works really, really well. You can see that's your trade setup right there. Nice trade. But if you, we have other zones to look at. So let me show you this real quick. We have deeper zones, but it works the same way on deeper zones. So this is since midnight. It's still the same methodology. You just get deeper zones because the market sometimes pulls back into deep zones. So the deeper zones are, I keep on one chart by itself. I don't keep it off the 25 zone. It's just too many lines on top of each other. Some traders like to do that. They send me their charts. They'll put the 25, 35, 100, and 200 zones on top of each other. But you can have a separate chart that has the 35 zone on it, the 100 and 200 zone on it. So you can see that right here, it closes inside of the 100 and 200 zone. You'll see this all the time to give confluence. This is a strong trade. Super strong trade right there. It closed inside of 2 of my zones, 100 and 200 zone. These are my deeper. They don't come up very often. When they come up, look for a big pronounced move. That is a buy. 64.5. Got as high as 85. 20 S&P points. Then we come inside of my 35 zone. 35 zone. $78.5 got as high as what? 01 so far. So you can have a separate chart with my additional zones. Do you need to trade these additional zones? No. But I tell you what, if you get outside of HV and LVA and we're imbalanced, that 35 zone is one of the best zones that you can trade because it sometimes overshoots the 25 zone, goes right to the 35, and it just, this is how I let you guys know about that big drop coming up on Wednesday because we're way outside of HVA. I said this 35 zone should come down to it. We were way outside HVA, right? I said we should come down to 35 zone and it should go. And I said if it doesn't go and we close below this 35 zone market structure, this market has a 10-point potential drop just like that down to our target. And sure enough, it broke, never pulled in, and traders got a hold of that in the room. Congratulations. That was posting in the room, and they nailed that 10-point drop, and it fell quickly. So these zones, the reason these zones work so well is because, remember, these are electronically traded markets. Electronically traded markets. They're leaving their footprint, and they're great launching points for us to trade off of. Right now, we're looking for this guy to pull us in. No pulling yet. So what do? We just sit. So let me show you the zone, the top zones that we trade off of. Our main chart is this. 35. Unirinco. Our main zone, 25. This is our proprietary Rinco zone. We made this bar type ourselves with the ingredients in it. That's the zone, 25 sim zone algo. And then our trend that you should be using is a 100 Uni trend to keep on the right side of the market. You can change this to 165 and have it beside each other, get more trades if you want. But that's your basic setup right there on the S&P on a 24-hour chart. Just like that. Okay. Now, the other zones you can add, if we're outside of HVA, I add a 35 zone on a separate chart, on a 135 chart only. And on that 135 chart, you can also have a 100 sim zone and a 200 sim algo zone. We had a confluence here this morning. I just showed you. You see that big move it had this morning. But for new traders, this is your setup right there. You get enough trades just by doing that. I only look at the 35 zone when I'm outside of HV and LVA. 100 and 200 zone, you can put those all by themselves on one chart if you want. You can put them all by themselves on one chart. If you do the larger ones on one chart, let me show you. Without the 35 zone on it, it's very, very neat what it can produce. It caught a huge potential trade yesterday right after PPI got released. So if I look at yesterday, and I put my 100 and 200 zones on all by itself with nothing else on it, look at this trade that it caught in the buy zone. Look how these algorithms are programmed to catch these zones. Look at that. Right at the news release at 8:30, look what they did. They brought it. This is a NYMEX chart, right? So I got a NYMEX chart I use on my 35, mainly my 100, 200, and the 24/7 chart. So I use a 24/7 chart, and then I use a NYMEX Metals RTH6 on these larger zones because they don't come up very often. On these larger zones, I use a NYMEX chart. NYMEX Metals RTH6. What does that mean? It means it's going to start trading at 8:25 in the morning and stop trading at 1:30 in the afternoon, 1:15, 1:30 in the afternoon. But what it does, it shows me dynamic liquidity grab zones that have potential for a big run. So right when the PPI got released yesterday, look how it caught this trade just under 6,000, as high as 6,050, a 50-point liquidity grab, a 50-point liquidity grab potential. Then it came back down at 11:30, the same session yesterday. At 11:30, it got inside of my 100, 200 zone. You only get a couple trades like this a day inside these zones. There it is. 38.25. That is high as almost 48. Like I said, they like to move 10 to 12 points. You're not scalping for a half a point, 2 point, 1 point. If you're going to use a large reversal bar, we're looking for larger moves, period. But you can use, if you want to trade the additional zones, this is my 100 and 200 zone. And what you want to do is you can use this. I use only the 135, only the 135 when I'm looking at these zones, these larger zones. I don't use anything less because I don't want to get confused about double V bottoms, M top, all that stuff. I use a 135. It's got to hold the integrity of the market structure again. They're really good launching points. So you can just put these on all by yourself and just have that chart running where you don't even have the 35 zone on. I only look at the 35 zone if and only if I'm outside of HVA and LVA. Our standard zone is here. It's just a 25. But I'm showing you the deeper liquidity grabs can be on my additional zone off of the separate chart. Here, it only gives you a few trades. Only gives you a few trades. And it's got to hold the zone. Like there, never qualified any zones at all during the day. This one caught the big one. Oops, this is out of the way. This, it caught the at 950. It caught a big trade. It caught it from a couple days ago, 609 into the close of 26. This one almost made the team. This is a deep liquidity grab. Almost made the team to make it. But my point is that you can use these larger zones also to catch additional trades. But guess what? You trade it the same way. I come inside this larger zone here. It can't close one candle outside my larger zone. If it closes just one candle, this is how accurate these zones are. If it just closes one candle, it's right there. Okay?